Good evening, everyone. Welcome to Officer 24/7. My name is Niharika Walia Bhatnagar, and I'm with you with the area of AFM. Okay, so today we'll be ending our Module C. The last class for Module C is today, where I'm going to pick up the topic of working capital management and derivatives, everyone. These are the two topics that we'll be taking up today. Both the topics are related to the area of last part of Module D. So let's look forward to it, everyone. Please let me know if I'm audible as well as clearly visible. Chaliye. Now, let's talk about the topic of working capital. Acha, what do you mean by working capital, everyone? Working capital refers to the capital which is used for daily operations of the business. Okay, in a bank, it has a different meaning, while in terms of other organizations, it has a different meaning. In terms of working capital in a bank, they have certain formulas which they use. Okay, so there are certain formulas that we'll be working on. So though there are actually three methods in terms of the working capital management in terms of the banks. But what exactly is working capital? In terms of working capital, I can say working capital is current assets minus current liabilities. That is CA minus CL. Current assets are those assets which can be converted into the assets which can be converted into cash within a period of 1 year or one operating cycle. Current liabilities are those which are to be paid off within 1 year or one operating cycle. Okay, so that's all about the area of working capital. Okay, here comes the first question. This is from the area of working capital, everyone. The first question says, what is trade credit? Everybody, what do you mean by the term trade credit? But in a business, na, sometimes you have to ask people for money. Why? What happens is sometimes we do not have that much amount of money where we can pay off everything as early as possible. You know, sometimes it is not easy. So when it's not easy, what should we do? When we are not able to pay at any point of time, na, then it is better to have any kind of credits in such a way that where we are mm, taking something on credit. That means we'll pay them later. Right now, we won't pay so that we have money with us. This is a credit given, provided to the customers by the banks, or negotiated delay in the payments to suppliers, or long term financing from the shareholders. And the last one is government grant for business. In this case, what's going to be the answer, everyone? What would be the answer? The correct answer in this case is going to be B. When we talk about this entire area, it's a negotiated delay in the payment to suppliers. Matlab, we are deciding to make the payment to the suppliers in such a way that we won't make the payment right away, but we'll make it a little later. That is called negotiated delay, everyone. Because right now we agreed that we would be paying them, but not today, but in a certain future that would be there in tomorrow. Okay. Now comes the next question. Please. The serial number is wrong. This is our second question. Which of the following statement is correct about the assessment of working capital requirement? RBI guidelines require the banks should adopt only turnover method in terms of working capital. Where this is not true because any method can be used. They haven't said any one specific method to be used. Each bank is free to adopt its own method in working capital. RBI guidelines permit to use only turnover method MPBF method for assessment of working capital. Assessment of working capital is not affected by the level of operations of the borrower. The correct answer is Each bank is free to adopt its own method. There is no restriction. As I told you, there are multiple methods, but there is no restriction on which method to use. Acha, everything, there's one particular thing that I actually missed out in the beginning. Uh, since today was the day, actually the is the day of the establishment of Ram Mandir, right? So when we were doing all the work related to the foundation and the Pran Pratishtha of Ram Mandir and Ramji's. The Murti Sthapana was also there today. So ultimately it was a very auspicious day. On the eve of this auspicious day, we have decided to give you a discount of 80%. This sale is for a very limited period, rather, it's just for today. You can use the code Y541 and get our courses at 80% discount. So please go ahead and hurry up and enroll yourself within today itself so that you are able to take benefit of this opportunity which you have just received. So please go ahead and check it out on our website and our app for further details, everyone. Okay, by the end of the class I will I'll show you the entire portion where you can go and take the 80% discount. Please go ahead and use the code Y541. Okay, so go ahead and check it out. The difference between the total assets and the total current assets and total current liabilities of the firm is called, acha, now this is I discussed, it is called working capital. But what kind of working capital? Gross working capital, net working capital, or working capital management, or working capital requirement, or none of the above. So everyone, this is actually a question from our book itself. This question is given in the IIBF book. But this question given in the book is wrong. Okay, in the question, they had given the answer as gross working capital. But in actual, gross working capital is not the correct answer. Why? Because in terms of gross working capital, it is only current assets. In terms of accounting, when we talk about gross working capital, it is that form of capital which is only current assets. While net working capital is the difference between current assets and current liabilities. Right? So, in this case, there is a correction in the book. So, let's talk about it. Okay, now the difference between the total current assets and total current liabilities. If we say talk about net working capital, always remember gross means when you just add one thing. Net means when we have CA minus CL. Okay, it is basically current assets minus current liabilities. This is called net working capital. Gross working capital is basically, this is the answer given in the book. Gross working capital means only current assets. It does not include current liabilities, everyone. Done? Okay, now let's move on towards the next question. Which one of the following is or are amongst the sources of working capital finance? Intercorporate, public deposits, factoring, or all of the above? Working capital is basically the money that we require short term. We don't require this money on a long term basis, but we actually need it on a short term basis. Why is it required? It is required so that the business can actually grow further. Okay? For that to grow further, they really need to know about all the basics. है ना? So, and whatever money is required to maintain themselves on an average basis, that is what we need, because till the time we do not have money for our daily basis, what will we do? How will we survive in the market? Because we cannot just depend upon the money that we are receiving after the completion of the work. What will we do during the period where we actually have to work? You know. So in that case, the working capital is related to the area of the short-term financial requirements being conquered. Answer is all of the above. Okay, identify the following, the correct statement regarding funded and non-funded facilities provided by banks. Both types of facilities involve transfer of money to the borrower. A funded facility may become a non-funded facility in due course or vice versa. Both letter of credit and the bank guarantee are non-funded, and all the above statements are correct. See, all the above statements are correct can be a little dicey situation. The reason is either it can be, I think, let's see. The question says both types of facilities involve funded and non-funded. Both involve transfer of money. No. Funded requires transfer of money. Non-funded doesn't. A funded facility may become non-funded facility in due course, or both the letters and of the credit. Okay. When we talk about the answers to this question, now, the correct answer would be C. Both the letter of credit and the bank guarantee are non-funded. In terms of bank guarantee, you're just giving a guarantee. There is nothing else you're doing now. So that means in this case, you are not giving any money, but just a guarantee that in case the other person is not able to pay, then you will pay. That's the bank guarantee. So both the letters of credit and the bank guarantee are non-funded facilities. Cash budget method of assessment is more suitable for those business enterprises which have uniform level of operations, high level of operations, low level of operations, or seasonal operations. Everyone, cash budget. Cash budget method is basically a method which is related to the area of uh, whenever we prepare cash budget, you understand the movement of cash only. You're not looking at anything else but just the movement of cash. So technically, the answer is seasonal operations. In terms of seasonal operations, you will find the variation in terms of cash requirements. During the period when there's a season, they will need more cash, and rest during the entire year, they will need lesser cash because they don't have to maintain all the people now. In an organization where people are working around the clock, for that organization, you need regular cash inflow. You need regular cash. While in terms of the seasonal work, in actual, the moment you actually need the money is the one where you have seasonal work, because that is not uniform. It keeps on varying. Okay, so these were a few questions related to the area of working capital. Now let's move on and talk about a few questions related to the area of a call option that is related to the area of derivatives. Acha, what do you mean by derivatives? Derivatives are basically those securities where value of these securities will vary with the underlying security. Matlab, they are determined not by themselves but the securities which are underneath them. A call option is a contract which gives a buyer a right but not an obligation to buy or sell specified quantity of the underlying assets. The right but not an obligation to buy specified quantity of the underlying assets. The right but not an obligation to sell specified quantity of underlying assets. Or D, the obligation to buy or sell a specified quantity of the underlying assets. As I just told you, this is related to the area of underlying assets. Okay? Call option is where the company is going to call people कि we will pay you and give us back our securities or the shares or anything that we have given you. So in this case, it gives you a right to buy, not sell. Put would be the point, and the in terms of this, it is the right but not an obligation to buy specified quantity of the underlying assets. Okay, that is B, the right but not an obligation to buy quantity of the underlying assets. Done. Okay. Next question. Who is the regulator of interest rate derivatives in India? RBI, SEBI, FMC, or none of the above? Which organization regulates it, everyone? The regulator of interest rate derivatives, where the interest rate fluctuations are balanced, and then we have the value of the security changes with the interest rate changing. That is RBI. The regulator of interest rate derivatives is RBI. That is Reserve Bank of India. Okay? Reserve Bank of India. Done, everyone? Next question. Which of the following statements is or are correct about future contracts? Acha, there are two kinds of contracts. One is forward and one is futures. The difference between the forward and futures is one part is related to the area of one of them is sophisticated and not customized. The other one is over the counter. That means two parties will sit together. They will talk to each other. Ki acha, this is what we are. This is what I want to sell. Someone says this is what I want to buy. What is the price of it? They determine that part. Okay. The customization is there in terms of forward contracts, but in terms of futures, it is regulated by the exchange market. So it is something which is way balanced. So future contracts are similar to forward contracts. This is true. Future contracts are highly liquid. They are very liquid. You can sell it at any point of time, and you can actually go ahead and liquidate your funds. I'm sorry. Next is future contracts is traded on exchange or all of the above. In this case, when we talk about future contracts, future are traded and they are non-customized. Matlab they are, yes, they are standardized in nature because it is done through the exchange. The answer is all of the above. The answer is D, everyone. Which of one of the following statements is not correct about the swaps, everyone? A swap is a custom tailored bilateral agreement. It is an over the counter product. Use of this product is not allowed in India. Or swap can be used as an asset liability management tool. It is used as an ALMC, ALN, ALM tool. ALM is asset liability management. This is actually the term which is used in the banking area as well a lot. There is no restriction on swap usage in India. This is not true that use of this product is banned in India. No, you can have swap options. Swaptions are there, swaps are there. So technically, there is no specific restriction put on these organizations. Okay? Next point. Which one of the following is correct? Is not correct about the credit default swap, everyone. It is a bilateral contract. It provides protection against credit default. Under this product, the risk seller pays a premium to the buyer. What would be the correct answer, everyone? Which one of the following is not correct about credit default swap? It is a bilateral agreement. No. It provides protection against credit default. No, it doesn't provide any protection. It is related to the fluctuations where people make money out of it on the basis of the predictability they try to have. Under this product, the risk seller pays a premium to the buyer. This is also not true. In this case, not correct. All of these are not correct. Then, acha. Now comes the credit default swap. CDS, everyone, a type of insurance for physical assets, a bilateral contract for protection against credit default, a government bond, or the mortgage backed security. In terms of the credit default swap, it is a bilateral agreement. No, but then this is also true. Then this is also true. No, then it should be which one is correct. This is wrong. I'm sorry, this is wrong. The answer is all of the above here. And in this case, it is actually bilateral contract for protection against the default. There, all the three options were correct. My mistake there. Okay? Done, everyone? Chaliye. Before I end my session, everyone, I hope you have reviewed our sale yet. If you haven't, then please go ahead and review it because the sale has officially begun, everyone. What you need to do is go ahead and check it out. Adda 24/7, everyone. Let me show you where to go. Go to our website, that is adda247.com. Okay? This is adda247.com. Go on to the area of JIB and CIB. Then you can see you have to just go to the area of JIB May 2024. You will find our Mahapack. Double validity is also going on. All you need to do is, currently Ram 75 coupon is available. It is at 75%. Use the coupon code Y541 everyone, and you will get 81%, 80% discount, 79% plus 1% if you are using our app. So technically you can get up to 80% discount and double validity on JIB Mahapack. In the Mahapack, you will get bilingual and English medium both. You will also get test series and ebooks both. Then you will also get the previous classes and the current classes, even the future ones as well. And at the same time, all these things are available to you. Just because you are looking forward towards Mahapack. One Mahapack means you don't have to pay even a single penny after this for the next 1 year there. All you will get regarding the examination in this particular Mahapack only, and everything is covered in JIB. All the four subjects are completely covered in it. Then at the same time, English medium, bilingual, both available. Then all the classes in detail are available to you. So what else are we looking forward to? So please go ahead and check it out on our website and our app for further details, everyone. The price is 6298.95. Use the code Y541 and utilize the app, because there you will get this particular discount at exact 80%. So please go ahead and check it out and enroll yourself as early as possible, because the time is taking away. So with this, good night everyone. I'll be meeting you in the next session tomorrow.